Good afternoon. It's 1 p.m. here in New York, and we're going to get started. So welcome to implementing prepaid representation services in your practice. My name is John Shealy, for those of you who don't know me, and welcome. The idea behind today's session is that there's a firm out there that does the representation work for TurboTax. If you pre-purchase representation services, they do it for like $50, and I know that they're paying the representatives to do the work a lot more. And I said, my goodness, they have the ability for the law of large numbers. They can sign up enough people to make it work. When I owned H&R Block offices, we sold a product called Peace of Mind, which was not quite what this is, but the same thing. We could offer it out for $39. Why? Because we expected 15 to 20% of our clients to purchase it, and or to sign up, depending how you look at the getting clients to join in. So I started to talk about it with other practitioners, experienced practitioners, and I was surprised to find out how many people are actually doing this, and maybe that it's a deep, dark secret in our industry. So I considered how we could put it together, and quite honestly, there's a national firm out there selling something similar to this for $2,500 for you to sign up and take a look, and I thought that was absurd too. So here we go with today's program, and I do hope that you'll share with me later possibly your thoughts on whether this will work or not work and why. And I don't know, maybe we'll form a Facebook group too for those of us that are considering implementing it, what we're going to do this year. As always, if you have questions, please ask me as we go on. I think right now you should be seeing my screen. Let me verify. Okay, so I would like to be pretty clear with a disclaimer that the purpose of this material is to introduce you to a concept for adding a service and some incremental revenue into your practice. Obviously, or maybe not so obviously, you need to be an enrolled agent, attorney, or certified public accountant or a U.S. tax court practitioner to be able to make this work. Certainly, if you're non-enrolled, this won't work for you, and we're not looking to suggest that it could. I want you to take away methodology for adopting the program. I've included some of my fees and my calculations in here to make this make sense, but certainly you shouldn't take that as what you should do or what you should charge. This is what worked for me and how it worked. They may not apply to you. I don't want you to take away that we're looking to collude or price fix. These are just what worked for me, because to otherwise talk in abstracts about A and 0.20% of A doesn't help, but I think this does. A number of other practitioners have shared bits and pieces of their stuff. Everything is shared with permission. HISTROICAL, though, has said, I don't care what you do. It's all outside my firewall. I don't think he said that. He says it's on the internet anyway, and it is. You can take a look at his agreement. Parts of it are included here. His website is judacalis.com, and he has these things buried on there if you want to go look for them. I think it's great that you've paid a fee to come here, and I'm not looking to get rich, but what I do ask is that this material, you really shouldn't share it. Sharing with people and talking to people is great, but you paid for this material. You shouldn't push it off to somebody else. But I'll let you live with that one. That's me, you know me. So how is your tax practice organized? Some of you are Schedule C filers. Some are partners in partnerships, although most enrolled agents are sole practitioners for whatever reason. Some of you are S Corps. A few of you might be filing a C Corp, but to report the income from your practices. But I don't believe any of you are filing a 990 to report the income from your practice, although it occasionally feels that way. So I think it's okay for us to sit here and talk about money and about making money in our practices and in a good way and in increasing the revenue for the work from what you're doing anyway. And, my mom's a retired enrolled agent, and she's been to some of my coursework. Sometimes I know she's coming. Sometimes she signed up with the office, and I don't know that she's going to be there until I see her. And sadly, she has occasionally commented that some of the things I tell folks I'm going to burn in hell for. So hopefully that's not any of today's things. So the first thing is, as enrolled agents, I want to remind you that you stink at sales. If you could sell things, you'd be out selling them, not in your office doing tax returns and accounting and bookkeeping and payroll and whatever things that we do. But this is going to involve just a little bit of sales, maybe. You've got to be able to speak to people and talk to them proactively about what you're doing. So part of coming up with your pricing on this, it's really nice to say I'm going to get X dollars for this, or I'm going to get $275 an hour for representation work. But if nobody comes in to buy, that's a pretty bad thing. Conversely, if you don't know what your numbers are and put together some sort of analysis and first say, hey, wait, this won't make sense for me, we need to do that. So first, I need you to go back at some point and figure out how many audit notices you receive per year. I don't mean payroll. I mean 1040, maybe corporation if you're going to eventually add that. But for right now, I would stick to how many 1040 notices you received. I would count correspondence notices, state notices, CP 2000 notices. And you're going to include in here even the mismatched letter that my estimated payments don't match. Because why? The clients see all of this as something that needs representation work or something that is a quote unquote audit. They don't differentiate, and you don't necessarily want them to here. How do you currently handle an audit when someone comes in with that notice? You have better clients than I do. My clients typically start with, man, you screwed up my taxes, or look what you did, it caused me to get audited, or something like that. And I try, as a younger man, I would argue with people, but now I just take a deep breath and say, well, let's look at how bad it is. So your client is angry or upset. Often they'll accuse you or your staff of creating the issue. Of course, you did the tax return. They expect you to fix it for free because, what did they pay you for if you're not fixing it? It can be difficult to overcome that objection that, they don't want to pay you. And some of us don't like confrontation. We don't want to confront that angry client or that person who's screaming and, oh my gosh, I need to fix that for them. You know what? No, you don't. If they have an audit, you didn't cause it. It's extra work. You feel sorry for them, but you're not, and you can be empathetic. You're not running a charity. You need to take care of this work. And I've found people that in the past where I was like, oh my gosh, I'll help you, blah, 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 where I didn't set the tone of, look, this happened. It's not my fault. It's probably not your fault, but we have to work on this, but it's not free. I've had better results and retained clients better than the days where I kind of kowtowed to it. Be upfront, be clear. So some of the potential replies to when you tell them when they get this audit notice, some of them are going to ignore the notice. And as you know, they ignore the first, they ignore the second. Finally, they get that certified letter, that 90-day letter. And then they show up. Oh my gosh, look what came today. And you're like, where are the other 4 letters? A number of folks will tell you they're going to do it themselves. And I tell them to go with God and wish them well and remind them politely that in the event you run into trouble, we are here to assist you. Some of them also tell me that they're going to hire an expert. And while that's insulting, I take a deep breath and again remind them, well, we handle this all the time. I know your business. We'll be happy to help you if you need me. And sadly, some folks get taken by an ad on late night TV or talk radio. Alan Thicke promises them he can solve their problem for pennies on the dollar. Well, go with God on that one too. So again, last year you're going to go back and you're going to take account of offices. And I want to remind you you want to break it down as you go through this. How many were office exams? How many were correspondence exams? How many were CP 2000s? How many were federal exams or from state exams? How many were Schedule A, mail exams? How many were Schedule C? Got to sit down with the examiner, with the tax compliance officer. And sadly, national research projects, I actually had one of those last year, as cumbersome as they are. Oops. very strange. I think I have a couple of slides in there twice. All right, so in 2016, my office had 2 returns that we prepared be examined. Each was a Schedule C, and in both cases, I told these folks that I needed $3,000 to start the exam, and that was a down payment. So there could be additional costs. Now, interestingly, I call it a down payment. I don't call it a retainer. I don't use all those fancy lawyer words because I am not a lawyer, but B, none of us are really using retainers properly. A retainer is I give you $3,000 at the end of the month. I send you a bill for the 3 hours of work that I did. Let's call that $750. And I expect you to refresh the retainer to $3,000. None of us do that, so it's really not a retainer. I do call, and the clients don't understand what a retainer is. They think of that scene in Good Will Hunting. So instead, I call it a down payment. Down payment, first of all, implies there'll be more money due. Secondly, we all understand what a down payment means. Now, in both of these cases, by the way, the fees, whatever time we spent above this was not worth billing, and I waived it in both cases. In that cost, I included going to meetings, reviewing records with the client, and some assembly was required, sorting receipts, copying them, paper clipping them, getting them to tie out to the Schedule C. I couldn't determine how many state notices we received. I recall one only because it was my cousin and he had a New York State head of household audit, which we all found funny. I don't remember anyone else getting anything of consequence. And of course, he didn't want to pay, so I didn't charge him anyway. My revenue then was $6,000 from the audits of the returns I prepared. So going back and thinking this over, I said, is there something I could charge everybody, some small amount that would keep me whole, maybe get me ahead, and not have to deal with some of these arguments with people over fees and why? Well, I think there is. So first, you have to think about some of your methodology on how you're going to charge. Primarily, there's 2 methods out there. There's what I call the TurboTax method. This is what TurboTax charges the self-prepared returns. Which is essentially a flat rate. The percentage method is what most folks I seem to see is they'll charge X percent of whatever the 2016 preparation fee is. And I'm aware of a couple of hybrid methods out there that seem to involve the better parts of these 2 different programs. So the TurboTax method is a flat price. It appears to be 2-tiered. It looks like it's $50 for some non-business returns and $49.95 and $79.95 for business returns. I've tried to get the exact pricing. I really can't. So short of bothering a bunch of people, I can't do that. Oh, everyone is telling me they're still seeing the first slide. Hang on. Yes, I have been advancing the slides. This is very strange. Hang on. You guys now seeing, someone just tell me, are you seeing, Jason, you seeing the correct slide now? All right. Thank you, everybody. I don't get why that happened, but I apologize. There was nothing on there that I think you need to see, but I did give you a full set of the slides, so you should be able to see them. My apologies for that. Okay, so TurboTax seems 2-tiered to me. I couldn't get the exact pricing, but it seems to rely on volume. Information I have suggests that there were 26,000 TurboTax returns audited that had purchased that program. So again, law of large numbers, that's pretty big. In speaking to my friends in just around, a lot of them are in New York City. Obviously, that's near where I am. Many of them seem to do the same thing, a 20% fee for 20%, 20% of whatever the tax preparation fee is, what they charge for prepaid audit services. I like that. It's pretty transparent. It's easy for people to understand how much it is. There's usually a 75 or some other dollar minimum, although in New York City, I think that most returns are probably at the $300 or higher range. So that's something for you to think about, but certainly you need to have a minimum fee in your contract. Some folks have this hybrid where levels of service. On a notice review, if you purchase notice review, which we'll talk about, there's one flat fee. And then for prepaid representation, there is a percentage of cost or a flat fee. Now, I went with a flat fee for prepaid coverage, prepaid examination coverage. And I pulled these numbers out of the air and said, can I make them work? So I liked the sound of $149 for non-business returns. And part of that, is assuming people are going to come in for notice review or anything else. Boy, $149 doesn't even cover an hour of any of our time, probably, for doing a good notice review or certainly for writing a response. I chose $299 for a business return, Schedule C, E, or F. And the basis there was simply that I thought that's what the market would bear. I didn't think anything higher would be palatable. Again, if I was trying to do a flat fee, and I thought that a flat fee would be a bit more, would be both transparent and seem non-negotiable. The percentage fee seems to imply that it could be negotiable because I'll be getting different fees from different folks. Of course, the argument is that a more complex return comes with a higher fee, and therefore the percentage, of course, would generate the higher representation fee for the more complex return. But anyway, in looking at this too, I said I probably need some definitions. So I said if it has a C, E, or F, it's a $299 job. If it doesn't have a C, E, or F, it's not a $299er. And then I thought for the casual renter with one rental item, it would only be $149. And again, I just thought from a fairness and quite honestly, I need people to buy the thing to make it work. So that's what we did. And as some of you know, we prepare cannabis returns here. And due to the likelihood of one of those getting examined, combined with the fact that these are businesses that are typically conducting in cash, I decided that I'm not going to offer this kind of coverage at this time to those businesses. And if we do, it's going to be at a completely different pricing structure. So I also took a further educated guess that I would be able to get 10 of these business filers and 20 of everybody else to purchase prepaid assistance. So the revenue model, I know you're thinking back to algebra in ninth grade and oh my gosh, when was I ever going to use this? Well, here you go. So I assumed if I could get 10 people at $299, my revenue from that would be $2,999. If I could get 20 folks at for the $149 product, $2,980, $5,979. So just pulling those numbers out of the air, which I really did, I said, gee, if I can get that many people, I'll take in the same revenue that I did the year before. Now, the numbers, what's that Styx song? Nothing ever goes as planned. It didn't go as planned. Only 9 business owners purchased the product. 27 purchased it at $1.49. So this kind of brought me in at a little bit more than I thought. And I was pleased with that because ostensibly I'm ahead by $671. No, $741. I received that money today for services that I might need to provide in 6 to 18 months. It's possible that I could lose and have many more audits. It's possible that I could come out ahead and have 2 or less audits. Now, interestingly, in talking to two people who have done this the longest and I feel are the most successful at it, the one person would not share revenue with me other than to say he's taken in hundreds of thousands of dollars over the years, and he feels he's ahead. The other person told me that she took in just over $100,000 last year in this revenue. And although New York State letter audits are up this year, her biggest problem is she feels her staff doesn't close them out quickly enough. But otherwise, she feels that she's making plenty of money off these programs. So it's something to think about. I said that number to somebody in Kansas when we were doing this program, and the response was her practice didn't take in $100,000 the year before, and the room laughed. So I do realize maybe some of the New York numbers, your mileage may vary depending on what town you're in. So there are some considerations here. First, you need to have an agreement. It needs to be in writing. More importantly, you need the folks that don't buy it to sign that you offered it and they said no. When I owned H&R Block offices, we offered peace of mind, and that was always a consideration. Is when someone got a notice, they were sure they bought peace of mind that year. You had to go find the document where they didn't buy it, or you had to have them produce their receipt. I think that you should cover the exams and notices up through an informal discussion with the manager. You want to clearly state that you're not going to cover appeals, although you're available to help with an appeal under terms of a separate engagement letter. Again, my opinion, I don't take clients to audits. I've taken one client to an audit in 30 years, and I was so sorry that I took him. So lesson learned. Clients don't go to an audit. Another lesson that I've learned is you need to give clients firm deadlines, and you need to have an out. So if they have an audit notice, you have 10 days to call. Assuming they brought it in promptly, when you call the auditor, they're going to want to schedule this in the next month. You need time to review the documents. You're going to give the client a week, 10 days at the outside. I need all of your documents here in my office. If they miss the deadline, you give them 3 days. My opinion, give them 3 days. I need your stuff here in 3 days, or I can't work with you. And that's it. And put this into your agreement. Release yourself. Don't get jerked around. Don't let people use your reputation. Now, should you exclude some things? I exclude cannabis. We're not even going to sell it to them. Is an ID theft an audit? I don't think so. I think you need to tell people this isn't an exam. It's not covered. Although that is an interesting other product you could consider selling everyone. Is an in-person identification an audit? We've had a few of those this year, actually more than actual audits. And I felt bad. The person had to go down to the IRS and deal with it, but I want to be specific. That isn't an audit, and I'm not going to help you with it. Maybe I'm overly sensitive. You probably know from the letters you're getting what's going on in your particular jurisdiction. In New York, we have this situation with Schedule C, what appear to be hobby losses. New York now, rather than doing an audit, if you've had a Schedule C loss for a number of years, they send you a letter that says, "Dear John, we noticed that you had a loss of $5,000 from your Schedule C last year." That really looks and smells like a hobby loss. So in order to save you the time and energy involved in an audit, we've adjusted your tax return and removed the loss. And here's your adjusted refund. Have a great time. See you next year. No mention it was an audit. No mention you have an appeal. No mention go see your tax guy. It's terrible. A lot of the folks come in, of course, screaming that we made a mistake. Question from the group. Does this only apply to issues involving the tax year for which the fee was paid? So if they buy it for a 17 return and they come in with a CP 2000 for 16, is it covered? So the answer to that, it's funny you should ask this. So first, the answer to that is no, because think of it as they are purchasing coverage for the life of that tax return is the way to sell it, right? So it's my 2017 return. I'm paying a fee today, and any letter you ever get, even 20 years from now, wink, wink, nod, nod, I will happily help you with this return. So while we're on this, let me add this to you. Let's say you implement this for this year, and you implement it for the $149 price. What you might say to someone is, there's still 2 years left on your 2016 return. I'd like you to buy coverage for that. So if you'd like, because it's the first year we're offering this program, I wouldn't do this in a future year. This is the first year we're offering this program. Would you like to purchase coverage for 2016 for half price for $75? Certainly, I'd have a separate letter, and that letter would have a jurat that said something like, I haven't received any notices or letters, and I have no reason to believe I'm being examined for 2016, and I'd get that fee. And if you really wanted to go one step further, you could say, there's a year left for 2015. Maybe you want to purchase coverage for that again, because it's only this first year that we offer these services. I'd like to give you that opportunity, and I would probably sell that for a third. And the question comes up, is half sufficient? I don't know. One of my thoughts is I should have gone back and counted, and I didn't keep good track. Again, I'm pulling some of this stuff out of the air to try and make it work. So where did the half come from? When I owned block offices, I go way back, and I did one of the pilots for Peace of Mind, and it was a slightly different product at the time. So the first year, what we were selling it, I want to say for $25, and then we sold coverage for the prior year for $10, and for 2 years ago for $5. And you had virtually no claims on it. You might have some, but we had virtually none. So is half sufficient? I don't know. But the idea is if you sell it for some reduced price, you might pick up money. But remember, too, we're also requiring them. They're buying 17 for 100%. And let's say they're paying half price for 16. So if they get a CP2000 for 16, what are the odds they're getting one for 16 and 17? I think you're still ahead. You're getting the money now. It's probably win-win, more is occurring the first year, but there is so much in the second year still, and it's more complex. I don't disagree, but it's just an idea to bring in additional revenue. And again, you're only offering this to someone who's bought that first year, right? So I have a client. I have an in-person ID for a foreign client. I had to go to the IRS twice in person. So you can do that as a rep, but it's super annoying. I agree. I would not include it in the prepaid program. Yeah, I would not include it in the prepaid program. And again, stating it, because does the client see this as an audit? Maybe. New York has earned income credit and head of household exams. Again, it's a lot of data gathering to send in and do, but they've ramped it up. The same thing with the 2016 notices for I probably meant to say 2106 expense, not 2016 notices. New York has ramped that up. So again, you have local issues related to this probably. At one point with the block offices, we bordered on Pennsylvania. We did a lot of Pennsylvania and some Ohio and Michigan local returns. My preparers frequently missed this. So when we filed one of those local returns, you're aware PA and Ohio have like 400 localities each, and Michigan has, I think, 7. You have to file these local returns. If you miss one, at the time it was a $100 penalty. I had to pay it. So do you have a system in place to catch this? Are you asking and recording the questions? Do you want to exclude those? I don't know. Something to think about. How about clients who are coming in and filing late? So it's after October 15th. I had no extension of filing 2016. Again, I don't know, but it's something to think about. We are not offering it to those folks. I'm taking the form, putting an X on it, came in after, and putting the date. But again, it may not matter. So you should take into account local concerns and how you want to address them prior to offering this to folks. So written agreement is a must. There are some folks out there. One of them is, if you follow CPA trend lines, Ed Menlowitz is a partner at Wyndham Smith & Brown, and he writes a blog. He thinks on some of these services, like when we talk about the notice review program, he thinks you should add it on to everybody's invoice, and you just put in parentheses, if you don't want this, don't pay for it. And I don't know that I mean, that's a great way to get more people to purchase something, but of course they might also think your fees went through the roof. I think you can't be passive aggressive. You need to talk to people, explain it, um, and you shouldn't cover them and ask them to opt out. If you're going to have your clients buy it or opt in, when they don't want it, they need to confirm it. And like your engagement letter, you want this signed by everyone. If it's a yes, it's a no, countersigned by your staff member if your business is more than just you. So when do they have to buy it? At the first visit? Up until the time you sign the return? Maybe up until December 31st with a one last chance to protect yourself sale at year end? So we tried that this year. Nobody bought. But I did send those out in December. One last chance to protect your 2016 tax return. I think they need to sign it by the time by the time you send out that tax return. I don't know that you need to have them buy it right on that first visit, unless, of course, you're finalizing and filing a return on the first visit. Then you do. We try to charge our clients to answer tax questions and correspondence. So what's neat here is if you're talking to every client and explaining this, you're going to tell your clients something like this. We charge our clients to answer tax correspondence unless it's a result of our error. We charge you to attend audits. If you buy the audit coverage, you can sleep nights knowing that whatever audit problem happens, we'll take care of it up through the conference level of the appeal process. Well, that's what someone else does. We don't. I only do it through the manager level at no additional charge. And then I tell them the hourly rate. So what's interesting here is you're having a conversation you probably don't otherwise have. I'm too busy, I'm too tired, I'm too lazy. I don't remind clients that, by the way, if you get a notice, I'm here all year, but there's a fee to review it, or there's a fee to write a letter, or there's a fee to help you. Now all of a sudden you're saying to people, backdoor, hey, if you need off-season help, we're here, we charge. If you purchase our prepaid agreement, if you prepay the coverage, I'm going to handle whatever happens or almost whatever happens. Again, and this, the client, when they come in, you can remind them, you didn't purchase my audit agreement. And I always think that's interesting again, going back to the experience with peace of mind, is when we had an audit or had to help someone, we always reminded them, had you bought, peace of mind last year, this would have been covered. So this is my friend Judah's agreement, what it looks like. And what's interesting is Judah's wife is a graphic artist. He's not as talented with things. So all of his stuff has this nice uniform look with the gray scale and black. And most of it's on his website as a fill-in form because he expects people to come in with things filled out. Now, I think he's a little more complex because he charges you a fee. So first you have to, check off the things, and it's not optional. They're checking off the things that you actually did, right? And he agrees to provide audit support in accordance with the fee you paid him. I thought I had it in here, darn it. So he gets a percentage for each type of form, and it includes a 5% for each state. So if you had a $500 fee, you can end up with for tax prep, you can end up with a $300 or a $400 prepaid audit agreement, depending on the complexity of the return. I think that's harder for people to understand and grasp. And I think the only thing that happens then is you end up with the folks with more difficult returns or riskier returns buying into this. And to be honest with you, you do want to appeal to folks who purchase extended warranties and service contracts, because that's really what this is. And folks that buy that may buy this as well, whether they're a quote unquote good candidate or not. That's not for you to decide. You want the client to decide. And again, if you go to judahcallis.com, you should be able to still download these documents. So in a sample agreement, here are some of the things we've seen coming up, and I'm not seeing a lot of questions. So if you have questions, don't forget, go to that question box and pop them up. So in a sample agreement, we're gonna meet the client, plan the audit strategy, help them prepare schedules and documentation, but we're going to define what we need from the client. We'll assist them in preparing the documentation and the schedules for audit, but we're not going to do the work for that. They're going to put it together. You'll see this. You're getting paid for representation work. We'll prepare a power of attorney. We'll call the IRS to schedule the appointment. Of course, we're going to represent the client. We'll appeal audit results with the auditor's supervision. In other words, we're going to have a manager meeting. Now, in some cases, up to the conference level of the IRS appeal process, what this means, this is wording that I would change, and in fact we did change, and we talk it up to a manager meeting, not the appeal process, the conference level of the appeal process, because that's not where we're going, and that's not what you mean. And I don't think you want to include an appeal in here. But again, that's me. Now, I don't do this, but in this agreement, Judah prepares amended state and local returns if needed to conform with the audit results. We get an additional fee for that. It can be nominal, but we still get a fee. Now, I don't do this one either, but I do part of this. I will not be held liable for tax, penalty, and interest resulting from the audit. Now, in some of the agreements I've seen, we'll pay penalties, but not tax and interest. Generally speaking, I don't offer to pay penalties in writing. I try to get them abated, but certainly in a case like this, a more common penalty is going to be the 6662A penalty, which is the accuracy-related penalty, which for those that don't recall, that's the 20% penalty if your tax changes by 10% or $5,000. We seem to hit $5,000 with some of our clients quite often, and I really wouldn't want someone to think I was responsible for that penalty, because there isn't great success in getting them removed either. The client needs to state before signing the returns that they'll review them to verify the information is true, complete, and accurate. Of course, that's typically in your engagement letter. You want a positive statement from the client that they reported all of their income. They understand sometimes the W-2 and 1099 doesn't show up by the time the return is done, but they've double-checked and made a list, checked it twice, and they're sure that they have all their income on there. The client states they've been advised to keep their records which support and verify deductions claimed on the tax return. That's in my engagement letter, and I've had arguments with people. No one told me to save receipts, especially when they only have their bank statements and credit card statements. So this becomes another opportunity to, as a reminder, to educate your clients about what they're supposed to save for 3 years or more. The client states they have received complete copies of the tax return. I don't have that on my agreement. The client agrees after they file the return. If anything changes, they'll let you know right away, and that if we have to amend the return, it will be for an additional fee. You agree to forward all correspondence to us within 10 days. They agree to promptly sign and mail to the IRS any letters we prepare on their behalf, and the audit results too, if they agree, right? They're not going to let that fester. In the event of an audit, they will actively and promptly participate and make available in an organized fashion the documents that we need in order to respond. Now, one thing in here that I probably should add, I take a power of attorney. If they're doing this, we take a power of attorney now, and I fax it into the IRS. Why? Guess what happens? Two things. One, we're going to talk about a little later, but the primary issue is I'm going to receive any documentation in the mail that pertains to this. I'll get a copy of the audit notice. I've had situations where a client who's overseas or out of town for the summer or renting their apartment while they're in Canada, I get the audit notice. The client has no idea they've been audited, examined. So it's worth having. The other interesting thing is if you're using Roger Nemeth's audit detective from Tax Help Software, often you find out as much as 6 months in advance now if a return has been possibly selected for examination. So it's kind of cool. Do I file an 8821? Someone asked me. Two people asked me, well, so Superman has the ability to fly. If he has, does he get in a commercial plane if he has to go help somebody? No, he flies. I don't take the 8821. I want a 2848. I want full authority. I want to be able to call the examiner. I want them to take my information as much as give it to me. I want to be able to say, my guy's out of town, my guy's whatever. I don't want to have to chase it down. As far as assuming, I know there's that argument, oh my God, you're assuming all this extra liability. You know what? Yes, I am. And I am assuming the additional liability to act. If I contact the client and I don't hear from him and they ignore me twice, of course I'm going to resign. Of course I'm going to notify the Internal Revenue Service. Hey, as of right now, we've tried to reach the guy. Not going to cause a problem, but yes, I take the 2848, not the 8821. We have some other ideas, and these ideas come from a year of doing this type of stuff and seeing people who have more audits and people who I want to pull my hair out of my head, although I'm bald. First, the client has to agree that they're going to collect all receipts, bills, bank statements, and other information that I need. And they're going to organize it into categories as they appear on the tax return. I had some bad experiences, first with people showing up with a shoebox or overnighting a shoebox. The second one is what they've called research really might not be research. I think it's office supplies. So when you find out you're short or you go to the exam, they're short of receipts, and you tell them, hey, you were short $1,000 on research. Oh, well, didn't you see the receipts for whatever? Okay, great. If they were research, which I disagree with, you're short $1,000 on office supplies. Oh, that can't be. So you know what? We're going to identify for you the categories and the amounts, and you will put together what you think those receipts are, and you can come to your own conclusion that you're short or where they are. You agree to cooperate in the audit process, including attending an audit. Now, like I said, I've never brought anyone, but if they were subpoenaed or if they had some crazy story and we think it's appropriate, they need to understand that they might have to come. We represent you, but if it's in your best interest to come, you need to agree to do that for me. Any final determination, of course, is presented to them for approval. They have to understand they're going to approve it. Some folks sign the closing agreements. We don't. I'd prefer they signed their own 4549 because they've looked at it. We don't want them speaking to the IRS. In my regular engagement letter, the engagement letter says they understand speaking to the IRS is at their own peril. But here we're telling them we don't want them speaking to the IRS at all before they contact me. Now, some of these terms come out of someone else's agreement where they don't cover collection division and they want to get paid normal rates. They remind you have to have the service each year. Now, what we've been doing is if someone qualifies for a streamlined audit or a streamlined with a direct deposit, I take the information, ask them how much they want to pay, go over it with them, and you know what? I call practitioner priority service and straighten it out for them when that first bill comes. It doesn't take that long, and maybe I should charge additional for it, but we don't. We just help them out with that one piece. So I'm going to go one more slide. Now we're going to talk about transcript review next. So I'm actually 7 minutes ahead. And one of the interesting things, this is a tough class to do via webinar. It's the first one I've done via webinar. When we do it live, I get all sorts of amazing feedback from you folks, either things that you've heard or things that you're trying to do. Someone is saying, I'm instituting something like this year, and I was going to use 8821s for anyone that buys it. I get your reasoning, though. It makes sense. Yeah, I mean, and the only other thought would be, too, is you've got to chase these folks down, right, and get them to sign it. In theory, now I'll be honest with you, I've called the IRS with an audit notice in my hand that the client sent me, or we have a couple of out-of-country clients that the notices come here, where I've been retained, but I don't have the power of attorney, and I've called them up and said, I want you to know this person isn't ignoring you. I'm waiting for the engagement letter check, power of attorney, and they usually appreciate the call, and you preface it with, I know you can only take information and not listen, so let me tell you what's going on, and you get a chuckle out of somebody, and if it's an examiner, typically they'll give you a little bit of latitude. They won't schedule the appointment. But so, if you only want to take the 8821, if that's what you're comfortable with, I'm not saying don't do that. I'm saying I take the 2848. I don't see the risk. Some of you attorneys on here might be chuckling at me. I don't know. But that's what we do. So I'm going to add a 5-minute break. This was requested after Wednesday's thing. And what about offering tax account monitoring as a service for which you charge THS users? Oh, Judy, did you open your Christmas presents on Christmas Eve as a kid? Yes, we're going to talk about that next. That's because that's a great use for their product. So right now, let's take 5 minutes. If there are more questions when we come back, we'll address those questions. Then we'll move on to input transcript monitoring. So it's 1:45 Verizon time. Come back in 5 minutes. If you have questions, please key them in for me, and we'll handle those. At the end, by the way, if you're happy with what we're doing, if you don't like what we're doing today, please email me or call me, and you can yell at me. Otherwise, if you would consider a Facebook review, that would be great for me. Tax Practice Pro on Facebook, we appreciate it. All right, so 5 minutes. We'll see you at 1:50 Eastern Standard Verizon time. Thanks. Hey, it's 1:50 Verizon time, and I'd like to welcome everyone back. I think there's questions. There are no more questions. I stand corrected. Okay, so let's move on. So, transcript review, the easiest way to do this, I'm not looking to promote anyone's software in particular, but you do need automated software to make this really happen now. I will, speaking for myself, I pay for tax help software from Audit Detective from Tax Help Software, and it does a fabulous job of what I need it to do. And the Nemeths, Roger and his father Bill, are the transcript geeks, I guess. You know, they're always looking at transcripts. And they do. Bill does a lot of rep work, so they're looking back and saying, "Aha! Look what happened here, and look what happened there, and had we known this." That this is what that meant, and it's very interesting to find these things out because you can use it to your advantage. So I do pay for my software. I get nothing from them. I do buy the executive version now, so for $700, I think $700 a year. I just paid the renewal last month. So, how many CP2000s do you receive in a year, and that you have to review, and some of which you get paid for, some of which you don't? How many of those client returns might get an exam rather than a CP2000? And how many clients do you have who are may have a potential mismatch just by sitting here? As a quick aside, I disagree with preparers who take an incorrect 1099 and back it out, zero it out, or whatever you want to call they do on a Schedule C, or with a better example would be, say, constructive receipt of a Schedule C, or where the income actually received doesn't match, or better, I have an Airbnb rental that I rented for 14 or less days and it's my primary home. A 1099 gets issued by Airbnb, but I don't need to report it because it's excludable. The correct answer is you don't put the 1099 on the return. And when that notice arrives, you just deal with it. Hopefully you have adequate documentation. So in situations like that you know are going to come or you know could come, how many of those do you have in a given year? So this looks a little familiar with the client who comes in. How do you currently handle a notice? The client is angry or upset. They may accuse you of creating the issue. Client expects you to fix it for free. It's difficult to overcome the objection of, by the way, I need some money and you need to sign a new engagement letter. And some of us may not want to confront the client. You know, the client who's a little angry to begin with, and then comes in, oh, now I got a CP2000, or an audit notice, they'll call it, right? They don't know what it is, and you choose not to confront them, and that's bad. So ideally, you had these conversations with people, and in some cases, collected some money. So with the CP2000 or the CP2501, the soft notice, some of the potential replies are to ignore it, agree to it and do nothing, agree to it and sign it, agree, sign, and pay, disagree and do nothing, which is really the same as ignoring, disagree but provide you proof, you the representative, so that you can help them get the IRS to agree that the IRS is wrong. Response time is 30 days on a CP2000. You can obtain 30 more days with a phone call typically, but if there's no response, eventually it becomes a statutory notice of deficiency. So how does automated underreporter work? Automated underreporter is CP2000, and that's the tool that the IRS uses, and that's the program that we're very interested in so that we can sell to clients. So first, the software locates a proposed mismatch. That case ends up in the surveying inventory. So you ever wonder, how does the IRS select an audit? You know, how does a bill become a law? Well, the IRS takes out-of-area revenue agents and assigns them for 2 weeks at a clip to look at tax returns and transcripts for filed returns. Any return that these aren't necessarily CP2000s. These could also be returns that have a high DIF score. DIF is the differential score, which is basically the same as your credit score, except it's for an audit. They look at enough items. If you get a high enough score, it goes off to survey. So surveying is where human intervention intersects with computer matching. So they're going to review the data that they have and the tax return that was filed and either flag it for an audit, flag it for a letter, push it up to manager review, or look at it and realize, oh, I see what they did. This is fine. Take no action. Under take action, not including exam, the IRS sends out 6 million notices a year. That's a lot of CP2000s. At some point, the taxpayer responds to them, and then the case is subsequently closed. Now, this is a neat little transcript as only an engineer can draw, but it shows us where 2015 wage and income database is populated all throughout calendar 16. It's almost the end of 2016 before the IRS considers the database complete. Sometimes it happens over the summer. Usually you'll hear this when you call and request a wage and income transcript. They may say to you, okay, but so you understand these are not considered complete yet. So starting in June of 2017, February and March, the IRS starts running the match and looking for unreported income. And starting in June and running as late as October, the IRS starts sending out CP2000s, suggesting potential mismatches. And of course, this isn't perfect, but that's essentially when we've been seeing these things. So while the return is in survey, the examiner attempts to resolve the mismatch if they can. A CP2501 is a soft notice, potentially no action required. Hey, it looks like somebody claimed the same dependent as you. If you're wrong, you need to file an amended return. Okay. CP2000 proposes changes usually to income, sometimes to deductions. Hi, we can't match up this 1099 miscellaneous. We can't match up this brokerage statement. You took a deduction for an IRA. We don't have a 5498 on file. Sometimes too, all the income matches, the withholding doesn't. Please send us a copy of the withholding with $900 on it. Eventually, the SNOD shows up if you don't reply. The statutory notice of deficiency, also called a 90-day letter. It's one of the tickets you can use to go to tax court, as my friend Mark Dombrowski would say. So here's an example of a CP2000. I'm sure you've seen these. Proposed amount due, shows the tax, the payments. There's a substantial tax understatement penalty of 20% thrown in here. And there's interest thrown on the amount as well through 10 days from the date of the notice. I know you've all seen these. We've encountered some wonkiness in looking at notices, and I bet you have too. Folks that have taken Roth IRA distributions, the IRS shows them as fully taxable. Now, what's interesting is I don't see that with every Roth IRA, but what happens is when someone gets a CP2000 for another matter, all of a sudden the Roth is on there as fully taxable. $1099Q isn't entered on the return, but the IRS does get it. So the same thing, we've seen these show up on CP2000s in the event there's some other issue that's generating the CP2000. We've also seen a lot of IRS ignoring Form 982. So you'll see someone has $8,000 or $10,000 worth of 1090 or more of 1099C income. You do a Form 982, take the insolvency exception for that exact amount of money. I don't put anything on line 21, but even the folks that do put that amount on line 21 and try and back it out, generally you still get a CP2000 saying that they ignored it. We ask the taxpayers now to bring in, if we're taking an insolvency exception, we ask them for any evidence we're going to need along with the 982, and we send that along as needed when the response comes. The IRS. So now we're going to talk about, and I promise you we're going to get in just a minute to how this works. But the IRS instructions on the CP2000 are pretty clear. Do not amend the return. Write them a letter. Tell them what's different. You can also call them up. We've had some success on certain items calling up the IRS and saying, hey, you've got it wrong. And as you may know, if you call Practitioner Priority Service, it goes beyond item 3. So items, there are choices for correspondence examination, and later on, choices for automated underreporter, and it goes up to like 7 or 8 total choices. So you don't want to amend. You need to call or write a letter. If you think the IRS might not understand your letter, you can consider doing a pro forma 1040 and a pro forma 1040X if needed. They shouldn't be signed. You should write in the signature section, reference only, across the top, do not process. Call them Exhibit A, Exhibit B, Exhibit C, whichever it is, and reference them in a well-written cover letter. But don't amend. All right, so now we're going to start to tie this together. What if you could detect the CP2000? So I was mentioning before some of these transcript code junkies. The IRS generally considers a transcript closed 14 months after year end. January of 2017 is still open. February 1st of 17, the 2015 wage and income transcripts are considered closed. Now, in October, I've used a number of transcripts for the 2016 returns we did because I knew people were missing information. But of course, it's still not complete. There's a code 922 on transcripts, and 922 indicates that a return has been flagged for underreported income. So, as we said, the IRS starts running the 2015 in February and March of 2017. Code 922 will appear when they have a review when they see unreported income. Now, it takes a period of time from when the IRS has run this until the return gets surveyed and until action is taken. In this example, the review code was put on March 10th. The CP2000s did not go out until July and August that year. Now, when the letter goes out, the 922 code is changed to the date of the most recent letter. So if the initial CP2000 goes out on July 5th, that 922 date is going to update to 7/5/17. Now, we haven't checked this yet, but sometimes when you have partially agreed items and they mail you a new CP2000, I believe, but haven't verified, that the date would update to the date of that second CP2000. So what do we see here? We see an opportunity here that there's 3, 4, 5 months, certainly 3 months, in between when the IRS catches this and when the CP2000 comes out. So if you could detect that this code 922 is now on a transcript, you could pull the transcript, determine what's on the transcript and not on the return, and discuss it with the client. If it's missing income or an error on the return, we can amend now. This is where I wish we were in a classroom together, because if I said to you, what does that do? Well, primarily, it eliminates the accuracy-related penalty, primarily, and should just stick them with interest. In some states, that would also allow you to file that return early under a voluntary disclosure program. Alternatively, if you discover that the CP2000 is going to be wrong and the client has some great story, they have additional time to start gathering their documents. Now, of course, I wouldn't say to them, oh my gosh, you've got 90 days before they send you a letter. But what I would say is that letter's coming and I don't know when. I need you to start gathering these things. And we've said that the transcript sends out each time they send out another letter. When a notice of deficiency goes out, it does change the date there too. And the final notice in the series, the CP2000 or 2005A, they will not change the date, which is interesting. So for poorly organized clients, we typically pull the account transcript if they're filing on an extension. For those who have more complex, so why would we want to be monitoring for these folks? One of our largest clients, we don't do the personal tax return, we do 8 entity returns for them. And we were discussing IRS notices one day, and I asked him, and he told me he gets a CP2000, he knew what it was, almost every year. And I looked at him and said, you're kidding me. He says, well, we have 30 checking accounts between us and the kids, and he just went on from there. And they miss things all the time. And he said he gets a bill for a couple of $100. He doesn't even bring it into the return preparer anymore. He pays it if it looks right, which I think is a mistake, but got it. So complex returns and poorly organized returns, you'd probably want to monitor monthly to see if there's a mismatch. You might also notice identity theft too on a return. If you, for example, if you saw that they filed their income tax return already. As we mentioned, it seems that the IRS runs the CP2000s in February through April. So you might want to run the transcripts using software. Tax Help can do it. I imagine, although I haven't used Pitbull or Canopy, I know they let you pull transcripts, the same thing. You save all the transcripts as a PDF, and you use the Adobe search bar to find code 922. Any transcript that has a 922 code show up other than it being in a row and someone's social security number. You want to look at those transcripts, notify the client, and amend it as needed. Probably, now, the question here we're going to talk in a minute, whether you should be charging for this or not, or whether it's covered by the transcript cost. I think you charge for it. I think you charge to amend the states, and you remind the client you're saving them that 20% 6662A penalty. How do you monetize this? You have to have software which automates the process of running transcripts. And you have to run them off. You have to run them every month. But this is something someone else in your office can probably handle. Now, so how do you sell this to somebody? We're going to address that in a minute. But basically, you need to come up with a price. And for that price, you agree that you're going to monitor that transcript for that particular year. So you're probably going to run it for the 3-year statute. This is something you don't need to do in the office. A staff member can do it. Quite honestly, an intern can do it, or an admin, because they're just looking for that code 922. And again, you can use the software. You can download it into a PDF, and you can use the PDF to do it. I'd collect some small fee in advance for monitoring. Again, $79 is a nice ring to it. When something is identified, either an audit, a CP2000, you're going to charge for it. You want to file a 1040X ahead of the notice being issued, and a state return ahead of that 1040X being filed. Now, I haven't experienced this, but my understanding is some 922 flags don't result in a letter. Some of them appear to be refunds. So that's kind of neat. One other, you can amend it and get the money. Another thing is, in an initial review of some of these returns, if you have a new client come in, I don't know if you do this or not, but if you take a power of attorney and run it, Are there penalties out there for which a first-time abatement was available and missed? Now, one of the neat things, again, with the one software we're using is it does make a preliminary determination if there's a penalty and if it thinks there's an FTA available. So something to consider. So question, $79 for 3 years of monitoring. Well, that's what I'm thinking, sure, because you're monitoring everybody in mass, and you're not doing it. Hopefully you have a staff member that's going to sit here and do it. You know your market, but how much are people willing to pay for this product? $79, $99. Certainly no one's going to pay you $249. And the question was $79 for 3 years of monitoring. Remember, I'm only monitoring the current year, right? So my power of attorney will be limited to the year of monitoring. And if I happen to notice an issue, I'm probably only going to mention it if it's that year that we're covered. As far as mechanics, you do need to have some sort of agreement. You do need a sign off from folks who don't want to buy it. Hey, I offered it, you didn't want to buy it. I mentioned the soft sell before, and this came in from Ed Menlowitz. Now, what's interesting is they're not doing transcript monitoring. They were selling a prepaid notice review service. And the idea here was they were sticking it onto everybody's invoice. And if they, with a note, hey, if you don't want this service, we're happy to remove it if you let us know. Just tell me you don't pay it. Email me you don't want it, whichever. So another thought is put an explanation together and send out the agreement with your January mailings. Offer a discount to buy it early. Hey, you sign up for this today, it's $69. This is also something that I don't know that I would discount it, but I don't see a problem with selling it to people for any year that they want. Right now, you want to buy the last 2 or 3 years worth? I'm happy to take it from you for the $69 a year or whatever fee it is, $79 a year. So I'm just throwing that out there. I don't know what fee you would find appropriate. I'm going to ask. There's no CE for this class, so we don't need to ask poll questions. But I was just wondering if you wouldn't mind just giving me a quick answer to this one. Do you think that you're going to offer prepaid services this year? Yes, no, maybe. It depends. All right, not a lot of no's out there, so let me share that with you. 55% said yes, 9% said no, which is probably one person. 23 people are saying maybe, and one person is saying it depends. So I wish you luck. I probably should have asked, were you thinking about doing this before you attended today's seminar? Comment. I think it'll be hard to sell transcript review and prepaid audit both to clients. So what I would probably say is you're right. And I would probably say that if you buy the prepaid representation services, I normally sell you monitoring for $99. Would you like to buy notice monitoring for $79 or $69? And that's part of my gold inner circle member privileges package. I don't know. You don't want to sound too cheesy, but certainly you could offer a discounted price to buy both services and the same deal. Your rep client that you've sold the monitoring to, probably that's going to be to everyone's advantage when you see a proposed exam coming up. Again, just a thought. So I'm going to ask you just one more question related to that. Is what do you think you're going to try a percentage method, a flat fee method? Oh, a couple of you haven't voted. Just take a second if you want to participate. Ever notice how the percentages always add up to 100? Okay, I'm going to close that and I'm going to share it. So most of you are looking to do a flat fee if you do this, um, which is interesting. The percentage method, I kind of like it. More complex returns pay me more money, and everyone's going to pay at least a certain amount. But and it seems to work. Like I said, the two most successful people I know using it are using percentage method. So something to think about. So that concludes the webinar, unless there's comments and questions that anyone wants to ask. I see that most of you have actually everybody has a microphone. So really, I could unmute you, I think, and you could try and we could try and have you talk if you wanted to. But that's kind of funny. So anyone? Bueller? Bueller? Do I prefer the offer method or the opt-out method? I prefer the offer method. I'm going to explain it to you, tell you what it costs. My fear with the offer method is that a lot of my clients just pay the bill. So if I had added $300 to their bill, they might pay it and also think Sheely's lost his mind. His fee went up $300 this year. I'm going someplace else next year. So I think it's more important, at least the initial years, to make sure people to specifically offer it and explain it to folks. I think what you want to do is in your January mailing, you want a separate document going out that says we're offering an exciting new service. You probably want to sell into it that our clients typically, when examined, our clients typically pay us $3,000 or more, whatever your number is, to do an audit from soup to nuts. And sadly, the amount of time involved, that's the cost. What we found is that other practitioners are offering, this prepaid product, and because enough people purchase it, we're able to do this. Which, in the event you're examined, you wouldn't have an additional cost, something like that, and send that out with the document. They can return it with their engagement letter and the fee, maybe. You can also get in some money a little bit earlier, which is not a bad thing. I currently do not offer it to businesses, although I think generally speaking, that would be a smart idea because I haven't had any examinations of any of my business entities. When do we present this to the client? I guess it depends. If they're an in-office client sitting there, probably towards the end. If this is somebody that comes in to see me later, or doesn't come in, that either emails us or FedExes or uploads, those folks, I would probably get an email out to them at the time of the engagement letter so that they know what we're doing. I like the idea of giving them, if you haven't gotten the document back, one last opportunity when you send out the e-file documents to sign. And although we didn't get a positive response, I did try last year in December, last month, right after Thanksgiving. Oh, by the way, you didn't purchase this. I'd like to give you one last opportunity. Please call the office. And nobody called. I guess, too, you could offer them a special price for a prepaid decade, right? Is this something you would offer to a non-tax prep client who comes in for collection, CP 2000, or other services for other years? Probably not. I'm looking for incremental revenue. Although, Judy, I guess if I had a rep practice, right, and somebody was my rep client, I might offer it to them, but I got to think about that because, I mean, monitoring, yeah, I'd probably offer that. Prepaid rep, man, I don't know. Yeah, just someone else is saying they'd offer the monitoring too. I mean, on the one hand, we're asking them to attest that the return is correct. On the other hand, um, is that just the guy who's going to cheat constantly? Is that the only guy that looks to buy the product? I don't know. I don't know. Okay. Any other thoughts, concerns, questions? I think everybody on this call is connected to me on Facebook. So except maybe Mike, but Mike knows my email address. So okay, I hope this was helpful. I've thought about whether we should have forms and schedules and roll out a whole program for people and say, here's how to do it. But you know what? I can't do that for this price. So we didn't. But everyone should have a great weekend. If you think of a question or a concern after this, call me 646-780-8300, John at taxpracticepro.com, John at johnshealy.com, or on the famous Facebook. If you haven't previously given us a review and you'd like to, please Tax Practice Pro on Facebook and feel free to leave a review. Thanks, everyone. I will have this replay should be available in a couple of hours, and I've got to get, if you were on otherwise this week, I've got to get those up too.